The regulatory structure in the US is so different from every other place on the planet that it bears resemblance to nothing. Now, a lot of other countries bear quite a bit of resemblance to each other, but nothing is like the US.
Hello, everyone, and welcome to FinTech Leaders, a weekly podcast where we learn from today's global leaders in FinTech business and beyond. Coming to you from New York City, I'm your host, Miguel Armaza, and I'm a co-founder of Gilgamesh Ventures, a venture capital fund that backs early-stage FinTech entrepreneurs in the US, Canada, and Latin America. If you enjoyed this conversation, I encourage you to share it and please leave a review on Apple Podcasts, Spotify, or wherever you get your shows so more people can learn about FinTech leaders. Today, I sit down with Zach Noorani, partner at Foundation Capital, a 28-year-old venture firm with over $3 billion in assets under management, currently investing out of its 10th flagship fund that has previously backed great companies like Stripe, Solana, Lending Club, Envestnet, Alto, and more. In this episode, we discuss what Zach learned after spending almost a decade at Capital One and why there's such a strong FinTech alumni network coming out of the bank, differences and similarities between US-based founders and Latin American entrepreneurs, the importance of specializing in financial services and FinTech, and how it's allowed Zach to distinguish fairy tales from reality, transitioning from operator to investor, best practices for board management, and just a lot more. Hope you enjoyed this great episode with Zach from Foundation. Zach, welcome to FinTech Leaders. Thanks for joining. Where are you calling us from?
Thanks, Miguel. I'm home here in my house in Los Angeles at the moment.
Very nice. So we have a lot to talk about. You've been in FinTech for a while, and I'm sure you've accumulated a lot of learnings, lessons, and you've seen a lot of things. So we want to hear from you. Maybe tell us a bit about your career, your background, but I think one interesting aspect that you have is that you actually started at Capital One, which seems to be a factory for great FinTech folks. So maybe take us through your career, but also your time at Capital.
Yeah, it was never really my intention, or up until, more recently my intention, but I really spent my whole career in what kind of deserves to be FinTech, sort of innovation in the financial services markets, product innovation in financial services markets. But in no way was that the goal coming in. The goal coming in was graduate college and either get a banking job or a consulting job. And, the most interesting consulting job I could get my hands on was this specific role at Capital One. And it was more than anything, I was just so impressed by the people there, how articulate they were, how deeply they seemed to understand a world that I really had no point of view on. I knew what a credit card was, but sort of. But beyond there, I really didn't have much perspective. And so, the thinking was, hey, these would be great folks to learn from. And ended up spending 8 years, I think 8 or 9 years all told at the company across a variety of roles. But, interestingly, they were always, with an eye towards something that the business didn't do, help us diversify beyond just being a credit card issuer. It's a existential imperative for us to transform from a model line lender, a credit card company, to, sort of a multi-line retail bank. How do we do that? How do we get a bank to accept our currency? Or another way to say it, how do we go buy a substantial amount of retail bank? But all different kinds of projects and work relating to kind of what exists out there that we could be doing or that we need to figure out how to do, because it's sort of where the growth is. And so at the very early stages, it was let's go look into getting into the prepaid debit card business, because in 2004, 2005, I don't know that these names roll off the tip of most people's tongues these days, but Green Dot and NetSpend were, and Hire One deserves to be in there as well, were like the shining stars of financial services innovation, of fintech innovation. And a couple of years later, we were really looking hard at Bill Me Later that is a fascinating new form of credit originator, later acquired by PayPal and is now PayPal Credit. And it was really the first BNPL provider. But it was, this is a business we should really think about getting into. How do we do it? Should we buy them? That was a long inquiry that we embarked on. So always it was with this lens. And, towards the end of my time at Capital One, I started getting involved. We had a small venture capital fund that was doing, this still was before there was like actually a term for fintech. So we called it like financial services enabling technology. We'd literally say that 60 times a day. And, now it's sort of been contracted to fintech. It's much, much easier. And from there, I sort of really acquired a sense for what venture was. And, it was I had a bit of an epiphany moment where it's like, wow, this is the coolest kind of work that I could possibly imagine doing. The coolest kinds of puzzles, the coolest kinds of interactions, even the incentive structure, love it or hate it, it's sort of, there's a real purity to it that I loved. And so I've been pretty hooked ever since. The path led me to business school and then out from Boston to the Bay Area. And I've got connected with the foundation team, almost 9 years ago now. And so that's really been my family for longest stretch of my career. And so these days where I kind of spend my time is really earliest stage fintech investing. So pre-seed, seed, some Series A, across all facets of fintech. Certainly tons of infrastructure. We've done quite a bit of investing in consumer side. And, while a lot of primarily US based, we've also kind of got a portfolio in Latin America that we're very proud of. Certainly, not hard to get excited about opportunities down there. But yeah, that's sort of the 5-minute version.
Yeah. And I think there's a lot to explore in everything you've mentioned. What is it about Capital One that has produced not just investors, right? And there's several prominent venture capital investors that have come out of Capital One, but also a good number of entrepreneurs. They're building actually very interesting companies, and they have this Capital One DNA.
Yeah, a ton of entrepreneurs. I actually feel like that doesn't get discussed often enough. One of my favorite sort of category of people to invest in, I've got a whole sort of portfolio of former Capital One, employees that really coworkers there as well. And, what is it unique about there? I think in some ways you could sort of, the way that people talked about how they found ways to substantially upgrade the level of talent that was coming into, that was in always a very large industry, right? The banking and consumer finance industry. They succeeded. Rich and Nigel and the whole, machine that they built was really oriented around how do we fundamentally bring in the best people that there are. And they got pretty maniacal about building systems for that. So it's sort of, it's akin to the process that you go through for, a McKinsey Bain, type organization. It's highly qualified sort of case interviews highly calibrated case interviews where it's sort of performance on these things is something that you can gauge, very explicitly. There's a math test. There's a personality test that you have to pass to get to the next stage of interviews. And, all of that, I think from a top of funnel filter really helps a lot. And, they were pretty inventive about certain things where sort of, I think they get credit for having been the first U.S. company to recruit directly from the IITs in India, just because it being the case that this is a massive pool of talent that is being undervalued. Sort of starts there, right, with pretty inventive, structured kind of top of funnel processing. But I think that the philosophy of the company is really about let's understand these complex markets deeper than anyone's ever been able to do before, and get more creative about problem solving and getting, kind of what you want to do with that understanding. And so what comes from there is people develop real expertise, deeper expertise than exists kind of elsewhere in the market. And so many founders that spend time at Capital One, they were sort of trained around the kind of this investigative process, this analytical process, but also acquired real expertise in a certain area. So have a real penetrating insight about a version of the future that they can go create. And so all of those things are amazing attributes. It's not the end all and be all of what you're looking for in a founder, but it's a hell of a raw material to start with.
And speaking of this training that you've mentioned that you get as an operator, not just at Capital One, but other places, of course. It's a mindset that you build that is super useful when you're on the ground building a company. That switch from operator to investor, right? There are certain aspects that you have to change because it's a different type of job, right? What was the hardest part for you when you made that switch from an operator helping to build a division of a company and then switching to very top-down approach and then, actually focusing on just investing in early stage companies where someone else is building it?
Yeah, I think the learning process for me was, I think, pretty bespoke as a function of the types of roles that I had. I was either kind of an IC and sort of skunk work like projects, or I was a role player in gigantic teams surrounded by people that were like had so much more experience and expertise than me. And so what I had to get my head around was initially, my thought process was the degree to which this is this thing that I'm working on is a good idea. Certainly as an investor, that's pretty prominent importance as well. But as an investor, in the roles that I had, at Capital One, it could really just subsist as that. Is like, is this a good idea, or do I, am I excited about what we're pursuing? Because it's either up to me or it's up to me and a ton of people that I have so much implicit trust in because they're so much more expert than I am. As an investor, this shifts to, is this a good idea? But also like, well, what about the people? All of a sudden, so this is like this really like painfully obvious point, but it's sort of, what is your point of view on, the people's ability to execute on this idea? And, in many ways that overrides, the degree of goodness of the idea. And so that sort of shift of mindset, right? That it's sort of like good ideas are sort of a dime a dozen, and that it's really about who's executing on it and like who you're excited to work with in that respect. That transition for me was pretty significant.
I've heard people say that they'd rather invest in a B type of idea with an A+ team instead of an A+ idea led by a B team. Do you subscribe to that?
Yeah, I mean, you'd hope not to have to like make the trade-offs, right? Like maybe you shouldn't do either. Like if you knew you're getting a B+, like maybe don't run the race. But yeah, like I think you're more likely to see, outcome because like the idea is not static, nor are the people necessarily, but it, in some senses they are a little more static. But the idea can really oscillate, can really evolve, and that's sort of what you're getting with people that you really believe are amazing is like it's more about a general problem space than it is a specific insight.
Let's talk about fintech. At the end of the day, this is a fintech podcast. Since you joined the industry, what have been some of the major shifts that you've observed and that you've actually been able to ride this wave either as an operator but also as an investor? So maybe talk about some of the most consequential changes that you've seen in the industry, and then we can talk also a little bit about the future.
It's been like almost 20 years, I guess, not quite, but the amount of growth and attention and focus and enthusiasm for what is fintech, it wasn't really here. There wasn't really any. I remember talking to friends at generalist funds in 2007, 2008 about how I did financial services or type stuff, financial services, technology. And you just get like a sideways look. That sounds incredibly niche. I couldn't possibly, kind of imagine, bothering with that as a focus area. And it's gone to like, at this point in time, I don't know what a real measurement of this would be, but it certainly feels like 1 out of 5 VCs, it sort of has fintech as like a primary focus area, if not like the focus area. And so it's like, that's wild to comprehend. And in some senses, like maybe it makes sense by many different kinds of measures, right? 20 to 30% of GDP is, financial services sector. In other senses, you could argue like we've gotten to a place where hype has gotten the better of what kind of value creation you can really expect to see from this kind of a sector. And so, what's changed is, it's gone from, people sort of not giving a shit to way too many people giving a shit and, mistaking derivative kind of copycatting of business models for innovation and telling fairy tales in many cases about, what's going to be possible, what kinds of innovation is going to be possible, who's going to be able to disrupt Visa, MasterCard, and, what's going to upend Bloomberg. And, it's sort of things that, in the cold light of day, not impossible, but, certainly, not easy, shouldn't be easy analogies to make, and shouldn't be easy analogies to, kind of raise a substantial amount of money around and get a lot of articles written. These are utilities in our industries that will be very hard to, classically disrupt.
And as a specialist, that's something that I know you appreciate, and so do I, being a fintech specialist investor. I guess that is an advantage to discerning from maybe more feasible ideas to less feasible ones, especially in a regulated industry. How have you adapted kind of your approach from the moment an interesting entrepreneur comes to the door to the moment you commit? What are some of those key items, I guess, you have to consider when you're evaluating an opportunity?
Yeah, as much as possible, right? It's easy to kind of make up some story about what you're doing and have that not really relate to what's happening on the field. But as much as possible, it's really like, what did you get your hands around what are kind of deeply held beliefs you have about like sort of what should exist in the world, and not merely, well, this isn't a direct analogy, but like, Google changes an algorithm and all of a sudden your SEO dries up and all of a sudden you don't really have a business anymore, right? Like if one stroke of the pen, if you will, can really kind of take away what you perceived as the opportunity you were exploiting, then like maybe that wasn't as big of a gap as as you'd want it to be worth, spending years on, and a huge amount of energy and capital. So, it's not a great answer, but like, it's basically like aim for bigger, but also more nuanced, kind of opportunities, as these markets have gotten more competitive, right? There are more people like you and me, right? Trying to fund these kinds of opportunities. My retreat has been to really move earlier and earlier, to working with people, that I've known a long time, that I sort of have an appreciation for like what they differentially understand about, some certain part of the financial system than other people. And like, therefore like the depth of the insight that they're sort of coming with and helping them build their business, and so it's sort of, they weren't necessarily, they didn't initially think of themselves as entrepreneurs as much as operators that were, kind of very deep in the sector. But when you do kind of start to pull it out of them, you'd be surprised how many folks in those sorts of situations have an amazing vision for the way this part of the world should work and how to get there. And the only problem, it's sort of only problem is like, how do you build the company around this? And so what I've increasingly been focusing on is that, because here in that instance, what we have none of is like the risk that like the vision is too small, the insight is too minimal, the product will be too derivative, like all of those kind of those kind of concerns you might have. The issues are like, this person is probably new to entrepreneurship, right? And so, that's a learning curve that, I need to be their guide and traveling. And you have all kinds of risks in that sense, right? Because it's, this is just that's not a occupation everyone's meant to do, but one that, I've been really enjoying. It's been a fulfilling, experience these last few years.
And you mentioned at the beginning that you've also built a portfolio in Latin America, and happy to say that we share some of those investments. Now, at the end of the day, an entrepreneur is an entrepreneur anywhere, India, Brazil, US. Yet there are differences when you explore different markets. Maybe talk about some of the differences, if any, that you have observed between US entrepreneurs and, Mexican, Colombian, Brazilian entrepreneurs.
Yeah, I mean, honestly, it's that I could remember a time when there seemed like there was a real distinction. When we first started, really spearheaded by my partner, Rodolfo Gonzalez, first started investing in LATAM. His first investment was Rapid Seed. The founders that we had met up to that point they were scrappy, energetic, and, so you could describe them in many positive ways, but like unsophisticated, did not necessarily, were clearly just making it up as they went, had not, didn't really, one of the beautiful things about Silicon Valley, obviously, is like just the amount of mentorship, the amount of, pattern recognition that entrepreneurs are able to borrow from the people that came before them, right? And there were just, in 2012, 2013, there wasn't a lot of that. Fast forward to today, I can't, it's hard to tell the difference, to be honest. The company that we're mutual investors in, a company called Palenka, doing some very exciting things in payroll land in Mexico and Brazil. Those guys came from Uber, and all of the things that you used to describe, Uber as an exciting company initially, in terms of the creativity, the aggressiveness, the speed of iteration, they've absorbed every bit of that. And so it's sort of, other than sort of, accents and, geographic remoteness, I actually feel like there's all kinds of commonality now. And really the challenge investing in the sector or in the region for us is just, it continues to be the case that access to availability of capital, is a lot less certain. It's made huge strides, but it's nowhere near like what entrepreneurs, have in the US. And so, what does that imply about, how unique of a founder you really going to need to work with who might create the whole market themselves? David Velez building Nubank. Holy shit. Like he's attracted more capital to Latin America startups just in his company than probably collectively everyone else raised, for some period of years, right? He created the market, and you still need to view entrepreneurs as that in some part in those regions, I believe. Whereas in the US, you don't need to, it's always helpful, but you don't necessarily need to tell that story as much as like, well, the product will be able to speak for itself, the traction. If the SaaS metrics are good enough, that just, the Series B and C will take care of themselves. That's a much harder story to tell, in those regions, even to today.
Yeah, you have to be a lot scrappier. That is absolutely true. And I guess now, as a fintech investor, you see kind of the trends that are taking over our industry. And sometimes these trends, they cross borders. Sometimes they happen in multiple regions at the same time. Sometimes they start in a corner and then expand. Maybe tell us about some of those interesting trends and verticals that you are looking at these days very closely.
Yeah. It's tricky to talk about it across border because, the regulatory structure in each country is so different. Or actually, maybe the most useful way to talk about it is the regulatory structure in the US is so different from every other place on the planet that it bears resemblance to nothing. Now, a lot of other countries bear quite a bit of resemblance to each other, but nothing is like the US. And so it's kind of useless. All this like accrued knowledge I have about how various things work in the US is like kind of useless elsewhere. But, so I'd say, some things are, cross over quite well. But like, for instance, the opportunity in the US that I, just can't kind of get out of my head is sort of the, to borrow the expression from DeFi, from crypto, sort of this notion of composability that each system within financial services should be able to talk to each other, that there should be a way to, access, to read into those systems, to write into those systems, and that they can be building blocks upon each other. In many ways, it's sort of the category being open finance, open banking. Plaid obviously made huge strides here, but Plaid really, what they've made great success in is, enabling some degree more connectivity to bank accounts, to retail consumer bank accounts. There are a great deal, many more accounts, and systems, in financial services where there's still really the accessibility still operates the way it did before pre-internet era. And the thing that gets me, and so just being able to facilitate facilitate the connections, the integrations is interesting. And in some cases exciting. Payroll is certainly a place where, companies like Finch being able to integrate to payroll is a very valuable activity for, let's say, a 401k company. They'll pay handsomely for it. But what gets me so excited about this kind of opportunity is that what you've also done in the process of facilitating those integrations is you've made this activity so much easier, so much cheaper to do, that there are all different kinds of new applications that you could dream of making use of that data. And some of the time, those applications can be like whole new planets or, unto themselves. I love telling the story of Highline, which is a portfolio company of mine, which is a company that's facilitating payroll-based repayment of loans and bills. And so the notion is, or the way that it works is that rather than a consumer repaying a loan out of their bank account, that money gets deducted automatically from a fraction of their paycheck. If that consumer is a riskier borrower, kind of lower half of the credit spectrum, let's say, and that serves to reduce the risk of default hugely, reduces majority of the risk of what that lender might see for that consumer. And so really what we have here is an opportunity to, enabled by open finance, enabled by payroll integrations, like they're today a customer of Argyle and some of the other payroll APIs. Enabled by that, what we have is an entirely new type of payment rail that can exist, that has an opportunity to remove tens of billions of dollars of credit losses from the lender universe, and let aside how much you'd save in the sort of delinquencies and just collections costs and that sort of thing. And so, but like none of this would have been able to be entertained until inspired by, sort of how do we apply the plaid analogy to other stuff? What about payroll? What about consumer permission payroll? And then it's sort of like, all right, that actually works well enough. Then it's sort of Highline maybe can now get to exist. And it's sort of an entirely new kind of payment network. And so I think we're actually still quite early in the gestation of building sufficient interoperability that we can start to realize, like, what other applications really have an opportunity to deliver that kind of value. That's like sort of center of the bullseye for me. And, it's of course the case that that's, an opportunity in every other country, and so, Palenque, as we mentioned, is sort of pursuing that in Mexico. But it's one where it's sort of like the U.S. has a particular quagmire here in a particularly long road of adopting kind of open standards.
Yeah, it's a little bit like when the smartphones were introduced, combine that with GPS technology, and all of a sudden you have these applications that no one thought possible before with this new technology. And the same is happening at different levels.
There's a great point, right? So all of a sudden you combine those two things, GPS and the phone and a messaging thing and maybe a payment capability. And then it's like, the taxi can show up, when you press a button.
Right.
And it's like, wow, that's cool. And it still took 5 years for people to realize, like, it isn't just a taxi, right? That's like 10 times more people stop owning cars because taxis actually work so well, and taxis because they work so well, they can be so much cheaper, right? And so it's a whole new industry essentially that gets to burgeon forth. And so, like, yeah, I think we've got a lot more of those to discover.
That's a really good point. Zach, before we go, one question that has come up often, both with entrepreneurs and also VCs, is the question about board management. You sit on quite a large number of boards, if I'm not mistaken. So you've seen the good, the bad, and the ugly. Maybe share some lessons about board management, some best practices for other investors and for entrepreneurs.
Yeah, certainly. Like, it's an easy dynamic to be, kind of not have a lot of value, not have a lot of utility, right? Like, whether it's monthly or quarterly, you're spending several hours and it's sort of like experiencing drudgery. This is not like an insightful point, but it's the point that I find myself giving founders most often, which is like, don't be obstructed by the format that you have always been using to share in that board meeting, kind of updates on the company and sort of guiding the conversation. Don't feel trapped by those slides, and just refreshing the same charts. Who says that's the right discussion? Who says, that's what everyone needs to see? Like, as the company evolves, it certainly is the case that those need to evolve. And I just see it over and over. It's like, they do, like, they're just like, well, we got to do these charts and we're going to spend an hour and a half going through these slides. And it's sort of like, no, like, clean sheet of paper. What do we all need to get on the same page about? Like, what do you need us to know as the board? And then what do we need to talk about and figure out that comes from that? And, let's approach that with, a little bit of free thinking. And so that's not super obvious. It's just like, it's amazing how often that sort of does fail to actually happen.
And, when you think of your years as a VC, as an investor, what are the biggest reflections in terms of maybe earlier in your career, some mistakes that you made or things that you wish you would have done differently?
I think as a board member, it's imperative to take a step back from sort of your emotional response to what's happening. Because let's say the company's not doing well, it's a bad result. And all you can think about is how, this kind of, endangers your own job. Because, fundamentally an investor, you have the privilege of being an investor in a foundation insofar as I, am continuing to make money, through my investments, right? And so if that turns south, I've got to figure out something else to do, right? And so let's say that those bad results come in, and I think everybody goes through this, and it gets talked about a lot, but it doesn't mean there's less of it, which is all you're experiencing is like a bit of panic and anxiety, hearing these results, and all of your feedback, is filtered through that, that veil. None of that feedback is helpful. And so this imperative to kind of spill and sort of, this is the reality. And so therefore kind of what can be constructive, here. And that there really isn't place for my emotion in this board meeting. That's like if there was a venture investing 101, right? That would be like lesson one as a board member, but merits underlining. As a VC, I found that, chasing opportunity that hasn't been like living inside my head for a long time, something that I just learned about last week has always just been a tough path. That for me, maybe it's just like I'm so thick-headed, or I don't know what it is, but like the more that I'm able to follow a road of this has been a problem I've been learning about for years, maybe decades, and that there's sort of this deep-seated kind of point of view that kind of like nothing that I learn tomorrow will fundamentally change that. The more the better, And so for me, that sort of, it makes it tricky to sort of chase the next big thing around the corner. But yet that is the job, right? That is the job of now, what is possible with AI is an imperative for everyone to have a really strong point of view on, because it really does seem like, it's going to have huge transformative abilities, but yet this is so new, and so, holding both of those ideas in my head at the same time is something that I think about a lot.
So I assume you're always internally at Foundation pursuing and exploring multiple theses, kind of like challenging yourselves, what are some areas that you're observing? Is that something you're always doing?
Oh, yeah. No. So the way I describe kind of my process, I've got 6 to 12, theses more or less that are, things I'm interested in. I feel like I'm gaining enough understanding of to kind of have a strong enough point of view that there could be a way to, a play here. And you're continuously trying to update that mental model, right? You're learning new things about what's happening, and you're sort of saying there's no way this is going to be possible, in the near future, or, you meet a new company and they're all of a sudden their conversion funnel is magically working much better than you've ever seen anybody's work. And it's, oh, wait, this whole new opportunity is now back on the board. This happened with, neobanks with online checking accounts, where this went off the board for the entire industry for, several years, to the benefit of a couple of startups. And so you're kind of constantly going into that cycle. And so then a new technology comes around, right? So we talk about AI and, generalized AI. How can we make use of that, against some of these problems, is sort of a new variable, right? That's sort of the process.
Fantastic. Zach, so thanks for educating all of us. I mean, clearly you and I share a passion for this industry. We were optimistic about where it's going, and I hope we can continue co-investing together and just collaborating, because obviously I have a massive amount of respect for the Foundation team and for you.
Miguel, thank you so much for having me. This was fun.
Thanks for tuning in, and I hope you enjoyed this great episode with Zach Noorani, partner at Foundation. If you want more interviews, make sure to subscribe, follow, and leave a review on Apple Podcasts, Spotify, or wherever you get your shows. It helps and means a lot. And if you have any suggestions or thoughts about the show, just drop me a line on Twitter or LinkedIn. Signing off till next week, I'm your host, Miguel Armaza.